markets have kind of looked through this and shrugged it off. Look, even though this is obviously a negative development from the Trump administration, it's not like this comes as a terrible surprise. These discussions and these negotiations and the trials have been going on for a while. So there's nothing here that's extraordinarily earth-shattering. Now, the other issue, of course, is whether this actually rises to a threshold that could lead to an impeachment and removal from office. Remember, there's a long, long way to go before we even get near that. So I think what the markets are rightly focusing on is the more tangential, the more important issues for us, which again largely focus on, as Sarah pointed out, the strength of the economy. The economy remains on very firm footing. What you're seeing now is some of the strongest growth we've seen in the U.S. really since the expansion started. So I think that's what's being focused on. In addition to that, when you're also talking about the equity markets, I think the big focus is on the earnings story. Earnings, let's not forget, we're just coming off second quarter earnings, which was the best we've had in 10 years. And by the way, it wasn't just about bottom line growth, it was about top line growth. In fact, revenue grew up about 9%. So that's a story that mostly markets are focusing on.
Yeah, Mike, I don't have the numbers in front of me, but if memory serves, I mean, when Bill Clinton was impeached for what was it, one count of perjury, it had to be mid-late 90s, right? I know Santoli probably knows it off the top of his head, but the market kept going up during that entire period. If I remember, of course, that was the dot-com craze, yeah.
Right. During the impeachment proceedings, the market, it dipped, and I misspoke earlier, but it dipped leading to the impeachment proceeding. But that whole part, late 98, early 99, the market went up like 30% as that was going on. I think that's an interesting milestone to keep aware of.
Yeah, thanks, Jimmy, for filling me in. Filling that one in. Mike, sorry.
Yeah, no, I think the point that's made is an important one. Look, the markets, again, obviously there's lots of headlines and there's lots of focus in the media on what happens in terms of political dynamics in Washington. But at the end of the day, what we're going to focus on is what are the macro fundamentals, what are the market drivers, and that's what the market's going to really be focused on. The one other thing I will say is probably more important, though, what we're more focused on rather than the politics in Washington is the ongoing issues on the trade front. Now, obviously, we had some progress today on NAFTA, which, by the way, sometimes people underestimate the importance of NAFTA because we do a lot more bilateral trade with Mexico and Canada than we do with China. So that matters a great deal, certainly to U.S. manufacturers and certainly to U.S. consumers. So I think these progress on NAFTA is encouraging. But what we're going to be focused on next week is, remember, on August 27th, we'll hear about the $200 billion in potential tariffs on goods that the administration will begin to weigh here. And then we'll obviously have a comment period. So for us now, that's the next big focus is what will the U.S. do in terms of tariffs? Will it be how much of the $200 billion? How will they sequence it? Will it be 10% or 25%? And then importantly, what will China's reaction be?